Understanding the techno- Understanding the technology that powers the money is essential. Knowing the business drivers that inspire how the money is made is crucial. Bridging the gap between the mind of the technologist and the mind of the business is monumental. That is what TBF is all about. Let's start this never-ending conversation. It's time. Happy Friday. Welcome back to another episode of the Tech Behind FinTech. I'm your host, Anamdi Oswagu. Today, we're going to be talking about navigating third-party risk in FinTech supply chains. Interesting conversation. Solo show, so I'll be walking you through it. Going to look at it from a overarching high level, a lot to cover. We're going to, interesting stuff. Obviously, let's do some housekeeping things first. So we are streaming live from Facebook, LinkedIn, YouTube, Twitch. And today we are also streaming live from the Tech Behind FinTech Instagram page. We have a feed going from our platform that we leverage for these shows into Instagram. They just enabled this functionality. And I'm also streaming live from my personal Instagram page as well. But on Instagram, you can find us at Tech Behind FinTech. That's our Instagram handle for the show. Now that the housekeeping is done, just bear with us. Let me just check on something real quick. Yep, it's a lot of different things we are streaming from. We're going to get into today's topic. Always, like anytime we have this show, if you have comments, questions, please feel free to add them in the comment section. What other housekeeping things we have to cover? Yeah, next week will be the last episode of the year, and then we'll come back in 2024, January 5th. But next week's episode is going to be extremely exciting. It's something called Flip the Script. So I'll be being interviewed on the show and going through that by one of our former guests, Chinua Jones, who's also my sister. So it should be an interesting conversation. Looking forward to that. She was a guest in previous episodes and very insightful. So without further ado, let's jump into today's topic that we're going to talk about: navigating third-party risk in FinTech supply chain. So, what does all of that mean when we say third-party risk? Obviously, I always say this: you are the sum. You're only as strong as your weakest link. So we know that when we build these applications, we have a lot of third-party dependencies. Ironically, for the majority of B2B fintechs, they're in one of their partners or one of their customers' supply chain because they're providing the service. So I found it really interesting taking this route in terms of if we start looking at third-party risk from the fintech perspective. It also helps them with their due diligence process because you really start to think about, okay, what are some risks that I need to be aware of in my organizations when I'm partnering with different vendors to provide this the various solutions, right? If you are attuned to those risks, then when you go through your due diligence process for a customer or a prospect or whatever, you now understand the best way to put the best foot forward. So interesting process is going through many due diligence process with different clients on my side and seeing how in depth the questionnaires and how to automate the process. It's a whole thing, but also we have to look at it from the fintech standpoint because you're going to be adding on various suppliers to help you with your end-to-end solutions. I'm just looking at okay, cool. So let's get into it, right? So third-party risk for fintech supply chains. So basically, just potential risks that arise from external organizations and service providers. It's not it's not limited to just the small vendors. We also think about cloud service providers. Every most fintechs are leveraging some sort of public cloud environment, whether it's Azure, whether it's AWS, or whether it's GCP, right? Those vendors have uptime and availability. I think, man, let me my memory. I think in for AWS, for instance, either what it's 9 nines or 7 nines. So it's on like 99.99. It's a number of nines. It escapes me right now. I knew it for my certification, but escapes me. But there's a 0.0001 time that it's not, and when it's down, what happens? Your site's down. So we have some fintechs or different SaaS providers have a hybrid cloud solution. Some have other mitigation strategies, and some are not even thinking about it. It's assumed that it's going to be up all the time. But what happens if it's not? That's part of the idea of managing third party risk and really putting that down as a potential risk. So what are some key aspects around that? So we start looking at data security and privacy risk, right? Obviously, we're dealing with a lot of sensitive financial information. All the third parties. Now, if you have a vendor that you're leveraging, right? They have access to that. So if they're compromised, unfortunately, you're compromised. So compliance risk. It's a heavily regulated environment. So what if a potential third party that's being leveraged, they don't fit into that compliance standard, but you're telling your customer that or your client that you are compliant. And for instance, let's just use like some data privacy around GDPR, but a service that you're provide a service provider that you're relying on is not. Then technically, if they have your data and they're exposing that, then technically you're not compliant. So the goal is to understand that and really have a handle on the different service providers and vendors that you use. Operational risk, right? Um, so there's a dependence on third party services. So, if they're down or there's service disruptions, that can impact, like we just said, uptime and things of that nature. Reputational risk, right? So if a third party that you leverage has a data breach or some unethical practice, you're also impacted by that. Because once again, you are the strongest, your weakest link. There's financial risk, right? So the financial stability of a third party can impact the fintech's operation and financial health. So, all of these are various um, risk and different aspects that when you're partnering or leveraging certain service providers, you have to understand, are you susceptible to these particular risks, right? And that's where we're going to get into due diligence comes in to try to understand it and see. You have to ask questions, you have to monitor your various vendors and so forth, because it comes back on the fintech. Even though your systems may be in place, these are part of your supply chain risk. All right, let's and once again, if there's any insight and things people want to drop, please add to the comments. Let me check to see. Okay, there's no comments in this other platform that we're using. So should be fine. All right. So the next question comes into, how are we going to manage? Why are these basically risks crucial in terms of for fintechs? And let's think through it, right? So we talked about regulatory compliance. Uh, they must ensure compliance across the organization and their different operations, but also across the supply chain to meet industry standards. Once again, if you're mandated by some regulatory standard and one of your vendors don't adhere to that and they have your data, then technically you're not meeting that standard. Um, so it's just various things. I mean, even thinking about business continuity, right? How would one of the how would a third how would a failure in one of your vendors, right, impact your organization? Like, what are your different strategies around that to continue your business operation if someone you relies on goes down, whether they're a payment system you rely on, whether there's, like I said, cloud environment you rely on, they house data. I mean, different things like that. I mean, it's the idea is, all of these are risks, but we got to kind of think through it and document it and understand what's our mitigation strategy, what's our business continuity strategy, how do we actually work through it, these different issues. So let's continue, right? So, we kind of talked about identifying the different risks, and we kind of gave a high level overview of them, from reputational risk to compliance risk to operational risk, and to security risk. So let's kind of get into right now the role of due diligence. So, what is due diligence? Is essentially when you are engaging with a vendor. I mean, and it's interesting enough because, like I said earlier, right, taking it from the perspective from the fintech this time, because most times the smaller fintechs, the startups, they're going to solicit business or solicit partnerships. So they are on the receiving end of these due diligence requests that goes out, and it's a lot of times it's time consuming. It's very in depth, and this is because the larger organization recognizes that they are as strong as their weakest link, which is at times a startup. Even though they want this new feature, they have to protect their customers and their customer data. That's their fiduciary obligation. So I like this exercise because those smaller fintechs still rely on various partners. So if organizational stamps from a standpoint, if you can determine, what are my standards, or what from a company's perspective in engaging with third parties, you're more so put yourself in a situation to do the same when you go after bigger vendors on a B2B side, or so forth. So, from a due diligence standpoint, let's think about that, right? A comprehensive assessment. So conduct thorough investigations into potential vendors, their business practices, including legal, financial, operational, and compliance aspects. Contract review. So, with all the different contracts that come forward, really understand the different service levels, how to handle data confidentiality and data breaches. How are you monitoring your the performance, compliance, and financial health? I mean, because sometimes you may get into a situation where these types of stuff is done one time when the business is first engaged, but you're working with the same vendor a year later. Are they still meeting those particular standards that they said they would? How's that working out? How are you monitoring it? These are important questions and different things that you have to ask yourself, right? And because the same thing, will probably be asked for you when you're dealing with bigger organizations and more institutional organizations, because they've been doing this for a while. They have certain things in place. So you can do it for your vendors. You then start doing it for yourself, and it makes your due diligence process a lot easier. Um, your third party audits, right? So you're going to engage in and review audits from vendor systems processes, particularly security. I can't tell you the amount of, from a security perspective, the amount of meetings I have to sit through. And this is one of the reasons, outside outside, I came up with the concept of cybersecurity for sales and partner enablement. That's because security and starts to play a big part in the sales process, because when you're trying to engage these larger organizations, they may love the functionality, but they cannot risk a potential compromise or you being their weakest link. So they want to talk to someone from security. They want to talk to they want to see how your what processes you have in place. Do you have certain compliance frameworks in place? Have you been audited and things of that nature? For and my case, dealt a lot with for fintech SOC 2 audits, especially in the B2B SaaS space. And this kind of helps them to understand. So, and it's so funny because I was working with this one fintech, and you know, once we went through the process and got SOC 2 audited and it worked out, had the rule now, when we partner with various suppliers that we need to leverage, they have to be SOC 2 because our standards increase. So the partners that we had, their standards had to increase as well. This way we know where all the links are strong. You could develop a vendor scorecard. So you develop a scorecard system to rate vendors based on their various risk factors and performance metrics. So, you know, from a risk perspective, you can put this to volume down there. From a risk perspective, it's not saying we won't do business with them, but we have to understand the risk, right? So therefore, we can look and plan and figure out ways to mitigate those risks. But if we're unaware of the risk, it's like a saying, right? The and I always use some boxing analogy or some combat analogy from like sports, but um, it's the punch that you don't see that knocks you out. So if you are totally unaware of the risk, but you're aware of it, you can plan better. Um, so, what's the feedback loop? Are you in communication with your vendors and so forth, so you can discuss, if they have performance issues or if they're changing service requirements, or are you in the dark? How is that working out? And once again, I think this is powerful because, if you have these practices for the vendors you rely on to help you deliver your product, you can now start thinking and putting these same things in place. So when you're dealing with bigger organizations or you're going after your B2B prospects, you can have these things in place. And it just helps really solidify your end-to-end process. Let's go through some strategies for mitigating third-party risk, right? So we talked about it, right? Initially, right, you want to go through some sort of vetting process, right? So you want the background checks, financial stability assessment, security audit. So it's different. I always talk from a security perspective, but financial stability. I remember going through it seemed intrusive at the time, but I totally understand now, right? Going through a due diligence process and the um, large organizations we wanted to do business with, they want to know about our financial stability, right? Because they don't want a situation where they bring us on and they're relying on us right now, but we have financial issues. We might not be around next year. So, these are different questions that you get asked during the due diligence process. But now, at the same token, you want to know that from your suppliers because you're relying on them to deliver your end-to-end product. Clear contractual agreements. You do not want this to be fuzzy. You don't want any confusion. You want to make sure that contracts are in place and it's going over your security standards, your data privacy regulations, how you handle breaches and disruptions. You don't want to start talking about it when you're in the situation. You kind of want to have a clear plan. Risk assessment framework. So, how are you evaluating and categorizing these third-party risk and potential impact? And later on in the conversation, we get into like a risk register, so you understand how to properly keep track of this and what a risk register is. Like you said earlier, regular audits and reviews. Cybersecurity standards alignment, right? So there's various different standards in the fintech space, especially B2B. We use the SOC 2, but what these frameworks help is just make sure you have coverage, right? That you're covering these different aspects because not everybody remembers every single control. But that's why we have frameworks in place. It makes the process of going through that a lot easier. And you have some sort of framework to capture these. I'm not going to even say low hanging fruit, just to make sure your posture is standard. And so you want the same thing that you want internally for yourself. You want that for your particular suppliers and so forth. So find out what they're using. Is it SOC 2? Is it some sort of NIST CSF? Is it It's various different frameworks. Data privacy. What are they using in terms of their standards and regulatory stuff like GDPR or and so forth. Incident response planning, right? So include third-party roles and responsibilities in your incident response planning, ensuring coordinated action. So, if one of your partners or suppliers gets breached, what's your plan? How do you how do you go through that process? What are the steps? So these are things to think about and plan. Like, if someone we rely on gets breached, our data's compromised. What are our next steps? It's different now when it's your breach that happened in your system, you make incident response for that. What happens if they get breached? Not saying it would happen, but it's good to think about. It's good to have certain things in place. Um, Diversification of vendors. I mean, this one's a little bit hard because I've seen situations where um, it's really a budget standpoint, where some organizations have hybrid cloud environments. They have an AWS environment and they have an Azure environment or GCP and an AWS and so forth, right? It's challenging for the smaller guys because you're not only thinking about the cost for the cost for the actual environments, but the manpower cost, right? You might have a team that's skilled in one environment and not skilled in next. Now, if you have a hybrid environment, you have to have resources that are skilled in both, and that gets expensive. So it's a nice to have, but if you're a smaller shop and you have a limited budget, it might be harder. But what you could have is, backup systems, number one, in your same cloud environment. You could have mirrored environments. So if one goes down, you have another one to pull from and so forth. So there's different architectural plans you can have for outages and so forth. Insurance policies. So what are your insurance policies that cover losses due to third-party failures? Some people are using insurance as a catch-all. Highly recommend not doing that. It's good to have it in place, but sometimes they well, we don't need X and Y because we have insurance. And as we all know from other catastrophes that happen outside of cybersecurity or so forth, sometimes you might have insurance in place, but they get a loophole, they may not cover you fully. So that's really important to understand. How are you going to be covered, and what circumstances would allow them not to pay that claim if something were to happen. Even though you have an insurance policy, there's other things you have to understand with that. Open communication, man. Like, you should have open communication. And what I've learned in stores, like especially when you look at the smaller fintech startups, they usually rely on vendors that are also starting up as well. So having some open dialogue and things of that nature and transparency can really help resolve potential issues. Education and training. Education and training, that goes with everything. Like, from a security perspective, from everything, you have to educate your staff on the risk associated with these relationships and the best practices for managing these risks. Let me see if there are any questions. Been talking for a little bit. And, this show, we're just going to go to different platforms and just see if there are any questions right now. Okay, doesn't look like there are any questions, so we will move on. Actually, well, coming towards a different part of the show. So what we're going to do is take a short break for our sponsors, and we'll be right back. Try to do this in the mid part of the show. We're going to go to our sponsors, and we'll be right back. One second.
Are you an emerging fintech with a limited budget seeking more sales and partners? Introducing Strategic Generation, your partner in leveraging cybersecurity for sales and partner enablement. Fintechs often lose opportunities due to unsophisticated cybersecurity programs. That's where we come in. Strategic Generation assists with due diligence, security posture visibility, penetration testing, and on-demand virtual CISO services. We connect your systems to our partnered platform, and voila! instant access to real-time diagnostics and compliance frameworks such as SOC 2 and PCI DSS. Gain the confidence of prospects and partners. Strengthen your cybersecurity program and drive success. Stop losing deals due to cybersecurity. Visit strategicgeneration.com and click on Demand CISO to connect with an expert.
Just like that, we are back. So, we're talking about before the break, we're talking about our third party risk, right? Navigating third party risk in the fintech supply chain. So, I mean, we went over like a slew of different things that we can do. So, what we want to just now go over, we're going to go over some best practices and we're going to wrap it up with, getting into a risk register and what this that entail. So, summary from what we've been talking about, right? Um, let's go over some best practices in terms of managing your third party risk. And like I said, I'm going to keep repeating this. I think it's powerful to put these practices in place for your particular suppliers and vendors from a fintech perspective, because when you have these practices in place, you can now ensure that you're doing the same thing for yourself when you're going after your particular customer base, right? It's just it'll make your due diligence process that much smoother. And guess what? Going after these customers, they're going to ask the questions too. They want to know who you're relying on to deliver your service, and what is your process for vetting these people? Because once again, you're only as strong as your weakest link. So that's very important to understand. So let's go over some best practices and let's wrap this up with the risk register, and then I'll let you guys continue with your weekend. All right. So let's go over some stuff. Developing a comprehensive due diligence process we talked about, right? So it's like, what is that? How are you assessing the financial stability, reputation, compliance standards, cybersecurity measures? And then as you start thinking about this, you start thinking about this for yourself as well, in terms of, when I say, I'm using yourself, but, for your company as well, your startup. Regular monitoring and reassessments. You want to continuously monitor the third-party vendors for changes in their risk profile and so forth. And, there's solutions. We even have one that you can automate this process and putting your vendors into the system to make that process easier. So you wanna constantly do things like that so you're on top of it. Establish clear contracts and SLAs. So SLA stands for service level agreements. You want to make sure your contracts are clear and in place. So you're covering all of the things specified in terms of breaches, uh, um, you know, uptime, downtime. All these things are specified within your contract. You want to build strong relationships because you want to keep an open lines of communication and transparency with your vendors, so you can collaborate and resolve issues. Uh, so funny. Last week, one of the lessons that we had in our show, the guest said, "Never apologize for technology." So it's not about whose fault it is; it's how can we resolve these issues. But you only can resolve the issues, especially when you're dealing with a third party, through communication, right? So if you don't have those things in place, it can be problematic. Implementing bus cybersecurity measures, right? So, what standards are they adhering to? Your SOC 2, are your particular vendors also SOC 2 or some other standard? You want to know these things. Training and awareness, right? So we want to make sure that and employees understand the risk associated with the third parties and so forth, so they can understand potential impacts and prepare for that. Um, and you want to leverage, as you said, technology to promote that. So, what type of risk management software you have, compliance automation tools, and so forth. Very important. And promoting a culture of risk awareness, right, is paramount. So you encourage employees at all levels to be vigilant about third-party risk and report potential issues. So, as I said before, right. So that's a summary of some best practices we were talking about throughout the show. And now we want to get into a risk register. So risk register, not complicated, it's pretty straightforward, right? But it's how are you documenting these risks? What are you putting it? I mean, before, years ago it was Excel, but now there's systems in place that you can actually document and have your risk stored. And the more you put there, it's just beneficial. I mean, you could talk about risk from a third party standpoint. Ideally, you want to put all the risks that you could potentially think of. This way, I mean, it's a process, right? It's not saying that you're going to have all the details at once. You may just have a risk. You might not fully understand how to mitigate that risk at the time, but at least document it and circle back. But it's good to just have these things in place, right? So you want to identify your risk, you want to categorize them, right? It's not only dealing with third parties, just overall. That's what the risk register is. It's basically a tool for risk management so you can document it. What's your likelihood and impact assessment? So, for each risk, assess the likelihood of occurrence, right? So, we talked about into certain cloud environments, they have 99 point, I think 79 uptime, right? But that chance that it does happen, obviously it's a small likelihood, but it's possible. What's your plan? Um, and what's the impact most likely if that happens, right? It's good information to have in your risk register. What's your mitigation strategies, right? So you want to outline strategies and actions to mitigate identified risk. And once again, you don't want to, because some thoughts are like, well, I don't have the mitigation strategy, all this in place, so I'm just going to wait until I have it. Nah, man, still put it in. That part will just be blank for right now, but at least you have like a running total. Who owns it? So who on in the organization owns this particular risk, right? Who's going to be in charge of monitoring the risk and ensuring mitigation strategies are effectively implemented? You don't want to put these risks without an owner, because guess what happens when things happen now? No one owns it. Everyone's confused. And you do not want to be confused in the middle of an incident. That's not the time to be confused. You want to kind of have at least some type of high level plan. You just want to have no plan. And this is the importance of the risk register. So you want to also review and update that risk register regularly. Uh, Next is integration with business process. So you want to ensure that your risk register is integrated into your other business processes, because each risk may impact a different business line. So, how is all that coordinated? Training and awareness. Is also so educating employees and relevant stakeholders about the risk and importance. So there should be some sort of meeting you have once you start doing this, and maybe it could be monthly or whatever, in which you go through the process of looking at your risk and just making sure they're up to date and so forth. You want to leverage technology, like I said. There's some online tools that, part of other compliance automation tools, even though for us, we have one from a strategic generation standpoint, the sponsor of the show that we leverage for our clients, but you want to have something in place. So, today I think that's the hold up show. I don't have any comments, but that's the show today. Just want to go over it. It's something that we haven't really talked about throughout. So I just wanted to give a high level overview. I mean, the goal of the show really is to touch on these types of topics that can help the fintechs. We are from a tech behind fintech. We want to help the technologists in the business and also bring certain aspects to light that startups and also fintechs may not be thinking about. So we want to kind of talk about these topics to really help the community. So that's what this show is based on. Next week's show, we're going to be talking about, we're going to flip the script. It should be a fun episode. We can definitely advertise that early so we can get a lot of participation. It should be fun. A good way to end the year and look forward to the new year, a new series of shows and fun guests and so forth. So it should be a good episode to end 2023 with the script show where I'll be being interviewed, and it should be fun. On that note, I'm going to give it a second because sometimes before I leave, there are questions that may come up. Oh, someone joined from Instagram. Thanks for joining, Green Eye Diva. Appreciate you. Yeah, so it's pretty much it, man. It's interesting wrapping up this year. So I had a really good run of really good guests this year in 2023. I really want to thank all of them. It's been a good year for the show. This is our third year in. Uh, really good topics, really great conversations. So I'm really thankful for that. I think that is actually it. I think we're gonna go. So listen, everyone, I bid everyone a great weekend. Hope you enjoy yourself. And that's pretty much it for the show. Thank you very much for your time today. Cheers.
Understanding the technology that powers the money is essential. Knowing the business drivers that inspire how the money is made is crucial. Bridging the gap between the mind of the technologist and the mind of the business is monumental. That is what TBF is all about. Let's start this never-ending conversation. It's time.